Hi, just a quick video. This is on a potential play for crude over the next 5 or 6 weeks. Hold on, let's shift all that out of the way. It looks like we've been kind of coiling, or we are, around this 50-54 area for the last, coming up probably 15-20 days. And one of the things that I've noticed is certainly the put skew has come off considerably since the 12th of November, which I think was probably looking like the bottom. Where are we? No, still went on there. There you go, kind of 20th of November. Put skew's come off quite considerably, which is expected. Is that what will happen is as everything decays off, we've been in this ridiculously tight range. It will just sit there where we've moved over from nearly on a 20 delta 30 days, just insane. We were up at 9.5 points over for the percent over for the put skew. The out of the money vol has also come off, which is here. Blue line is out of the money vol. Orange line is realized volatility or historical volatility. The reason that's not coming off and still growing because it's a 20-day average and we're not quite 20 days into all that chaos ending, so it's just sitting there. That will fall off quite dramatically even if we go lower because it's just an average. And you also notice the standard deviations has moved from the ridiculous 4.5 standard deviations, which I've not seen since 2014 when the Saudis decided to flood the market. It is coming off as well, and usually a little buying signal. Sorry, wrong terminology. People will think that's buying for going long. A signal that you'd use to be kind of entering a non-directional vol trade when this shorter 7-day standard deviation marker gets down to about 0.2, 0.3. I tend to kind of look at potentially a directional play that might fade, and that was all I was looking at really here. Is if we drop down through the 50 level. Just to show you kind of what's on this chart rather than just automatically assuming this. I've done a profile of the last few years post the not quite taking in the 2603 dip, but certainly a period of time through 2016, 2017. There's a lot of volume here as everyone was building that position, and OPEC were tightening supply. We've come back to that. Whether or not we go through, I don't know, but something I'd certainly would. As we break through here into the 40s, volatility will spike back, and this put skew will drop back up to 8-9%. So I was looking really at two things. One is that shouldn't run too far, and looking like selling a put spread, maybe a 45-35 put spread that's 6 months out. I haven't even priced it. I'll just very quickly price it on a quick strike and see what happens. And while that's loading, you can see a little bit of seasonality as well. So this is 5 years. 5 years? Yeah, 5 years of crude. Usually, I think a number of people have already pointed out the kind of the chunk of seasonality where it starts to sell off late October, November. And it's usually kind of stabilizing, as you can see here. But January is the interesting one. January, there seems to be that sell-off that comes in here and here, not even in the early part of this year, but then there's quite a stable time before the buying kind of comes in for the picking up for driving season. So I just wonder whether or not there's a good opportunity for getting into a put spread, because for shorting a put spread. It's a simple strategy that new people can get involved in. And it's limited risk still, but you're sitting on the short side. You're getting paid theta. You're short Vega. You're short a little bit of gamma. It'll kind of get people used to trading. Usually people go and buy an option, get long a call, a naked call, or in a kind of base strategy, and they're sitting there, and it's not as you're getting longer and longer gamma, you're paying away theta, and the panic sets in. Try and have a position that's opposing that's paying you. It might be worth people get involved in. So date wise, where do we roll off? So March has still got, how many days has March still got left in it? Hold on one second. Apologise. Should have been more organised. Oh, hold on, because I just want to make sure I've got the right number of days in. Unfortunately, quick strikes running a little bit slow. Today, 67 days. So I'll take this. Yeah, that's plenty. There's the H. Yeah, 61 days. Right. Okay, let's build this one up. So I'll do it in the H. And so I'll keep it fairly wide. So let's, maybe not as wide as doing 38s, but I'm going to just delta, 14 delta. No, get rid of that one. We don't want that. Oh, sorry. Sell the 45. Actually, we'll sell the 46 and buy back a 36. Does that give us enough? 19. Yeah, that'll do. That'll do. And what's the curve look like? So March 9, 51.77 off that. Yeah, that's matched to that. All right, so let's expand these. Can't stand away. That doesn't do enough of those. So at the moment, obviously, this is pricing this off 51.77, but we're expecting a move down. We're expecting a move down to, say, 48. So if we price that 48, we're going to get a lot more for the option. And we'll also probably find that at the money volatility will go back up to, say, 46%. So we'll be selling higher vol. And that's probably not going to happen for another 8 days, so we move to 52 days. Right. So this is saying that the optional, on the basis we drop down to 48. Oh shit, what's the lift on the front month? Moving up to, we've got 55 ticks on the forward, so that's probably going to be 48, 40. Just to try and give a true representation for everyone. So I've kind of built what the future would look like doing the 36.46 with 52 days left, 48.40, bearing in mind that we've got a slight amount, we've got a little bit of a lift in the March of 45 ticks, and moving vol up 6%, we'd receive $2. Okay, so we're going to, our expectation is that we see a significant move down to 48. So we drop below this line here, and then we engage selling the 46.36. And at that point, we expect kind of crude to hover around here. What we're saying, we're not really going to expect it to be doing much. Now, we would be putting the hedge on because we're not looking for a directional plays. We're looking for this theta to pay us, and for the put skew that we put spit over for us to be in our favour. So we, whilst it's a 21 delta option, I think I saw that when I made it. Why can't I find out what the delta is? No, down there it'd be a 30 delta option. So for every 10 you've got in, you've got 3 to hedge. You'd be selling those out. You could feather them if you wanted to, if you think it's going to bounce. But what we're looking for here is not the directional play, the spike in volatility, the spike in the put spread, so we're on that side, and then some stabilization. That's the objective of the game. It's not to be picking tops or bottoms. It's to be thinking about time elapsing over this area here. We're going over the Christmas period. With equities looking a bit dicey, we could easily kind of drop off another $2 or $3. Vol will spike, it'll be over spike. We'll see some settle into Christmas. New Year might see some buying in equities. I don't know. I don't really give a toss. But what we're looking for is this crude move to not gain any more speed If it does recover in the hedge, we'll keep hedging, but volatility will hurt us. It's just really for trying to get people to think slightly differently than a directional play. But you've got to wait for the underlying to be in that space. I hope I've made that clear. I can imagine there's going to be lots of questions from it, but yeah, that's that. Is there anything else worth showing? Open interest in the March around there. Sort of quick look. See if there's anything. Half this just I'm making a weird face. I look at this sometimes, just think it's utterly pointless, but we'll do it anyway. Just get rid of that and get rid of that and that. And then just leave the big quarters on there and the shorts. Right, okay. Put more strikes. We need to get those 36. 36 as we did? Yeah, 36. Oh, bollocks, look at that. You got to remember as well, we're kind of looking at something that hasn't happened yet. So I'm expecting a move to happen. So the OI of that forward projection won't be where its status is going to be at this moment in time. So right now, you could argue when we get down, trust me, when we break down through 50 and 48, the amount of OI in 45s and 40s will go through the bloody roof because everyone will be shitting themselves. But at the moment, it's not really there. So is there anything? So, the big numbers are there as well. There's 14, 16. Yeah, it's pretty small amount of OI. This will build up as all the mugs get involved, especially if we break through 50. But yeah, I think 46, 36 is quite nice because you're wrapping two big numbers here, which should, see some balancing. And they'll also overpay the curve. I tend to find that the smart guys tend to be around they wouldn't be into the 40s. There'd be a little bit of a tiny band in the curve. They'd be in the 38s or in the 42s and the 41s. Okay. Thank you.